Hi, this is the third video in the series for journal entries at the time of dissolution of firm. Let's go to example 6. Example sum 6. Rohit, Kunal and Sarthak are partners in a firm. They decided to dissolve their firm. Pass necessary journal entries for the following after the various assets other than cash and bank and the third party liabilities have been transferred to realization account. Solution: journal, date/serial number, particulars, LF number, debit rupees and credit rupees. First question. Kunal agreed to pay off his wife's loan of rupees 6,000. Liability taken over by partner. Journal entry: realization account debit. To Kunal capital account. Amount 6,000 rupees being Kunal taken over his wife's loan. Second question. The total creditors of the firm were rupees 40,000. Creditors worth rupees 10,000 were given a piece of furniture costing rupees 8,000 in full and final settlement. Remaining creditors allowed a discount of 10%. So the total creditors book value is 40,000. Creditors worth 10,000 have taken up furniture in full and final settlement. So that 10,000 has been settled. The remaining is 30,000 and we need to pay this subject to a discount of 10%, or in other words 3,000 rupees. So we need to pay 27,000 rupees to the creditors. Journal entry: realization account debit to bank account. Amount paid to creditors 27,000 rupees. Narration: being creditors paid. Question 3. Rohit had given a loan of rupees 70,000 to the firm which was duly paid. Partner's loan is an internal liability. The firm will have to pay it separately. So Rohit loan account debit to bank account. Amount of loan paid 70,000 rupees. Being Rohit's loan repaid by firm. Fourth question. A machine which was not recorded in the books was taken over by Kunal at rupees 3,000, whereas its expected value was rupees 5,000. So partner taking over asset, journal entry, Kunal capital account debit. Two, realization account. We need to write the value at which Kunal takes over the machine, which is rupees 3,000. Narration, being machine taken over by partner Kunal. Fifth question. The firm had a debit balance of rupees 15,000 in the profit and loss account on the date of dissolution. So it's an accumulated loss which needs to be written off among the partners in their profit sharing ratio. So we have Rohit capital account debit, Kunal capital account debit, Sarthak capital account debit, to profit and loss account. The total accumulated loss 15,000 rupees. We assume that the profit sharing ratio is equal because it is not given. 1:1:1. 5,000 rupees against Rohit's capital account, 5,000 rupees against Kunal's capital account, and 5,000 rupees against Sarthak's capital account. Narration, being accumulated loss written off amongst partners in profit sharing ratio. Final question 6. Sarthak paid the realization expenses of rupees 16,000 out of his private funds, who was to get a remuneration of rupees 15,000 for completing the dissolution process and was responsible to bear all realization expenses. We'll begin with remuneration of rupees 15,000 given to Sarthak by the firm. Realization account debit. To Sarthak capital account. Remuneration allowed rupees 15,000. Being remuneration allowed to Sarthak. The actual realization expenses of rupees 16,000, it was to be borne by Sarthak, and it has also been paid by Sarthak. So borne by partner, paid by partner, no entry for the rupees 16,000. Entries are done. I'll remove the split. We can view all the journal entries together. So these are the journal entries. Let's go to the 7th example sum. Example sum 7. Pass the journal entries for the following transactions on the dissolution of the firm of P and Q after assets other than cash and outside liabilities have been transferred to realization account. So let's begin with the solution. Journal, date / serial number, particulars, LF number, debit rupees and credit rupees. First question, stock rupees 2 lakh. P took over 50% of stock at a discount of 10% and remaining stock was sold at a profit of 25% on cost. So part asset taken over by partner P and remaining sold. So combined journal entry, P capital account debit, bank account debit, to realization account. Total stock 2 lakh rupees, 50% is 1 lakh. So P is taking over 50%, that is 1 lakh worth stock at a discount of 10%. So 90,000 against P's capital account. Remaining stock of 1 lakh is sold at a profit of 25% on cost, which is 25,000 rupees. So total sale value 1,25,000 rupees against credit of realization 2,15,000 rupees. Narration, being stock partly sold and partly taken over by partner P. Second question, debtors rupees 2,25,000. There's a provision for doubtful debts rupees 25,000 and rupees 20,000 of book debts proved bad. The provision for doubtful debts 25,000 is merely a book entry. The provision is created for any future bad debts. So the amount realized from the debtors is rupees 2,25,000 minus the bad debts of 20,000, so 2,05,000 rupees. Bank account debit to realization account. The gross value of debtors, which is 2,25,000 minus the bad debts, which is 20,000 rupees. So the amount realized is 2,05,000 rupees. Narration, being debtors realized. Third, land and building book value 12,50,000 was sold for 15 lakh through a broker who charged 2% commission. So sale of asset, bank account debit to realization account. Amount realized is 15 lakh minus 2% commission on the 15 lakh, which is 30,000. So net realized value 14,70,000 rupees. Narration, being land and building sold. Question 4. Machinery book value 6 lakh was handed over to a creditor at a discount of 10%. So, creditor taking over an asset in settlement of his claim, there will be no journal entry. Fifth, investment book value 60,000 rupees, realized 125%. So, realization of asset, bank account debit to realization account, 60,000 multiplied by 125 divided by 100 comes up to 75,000 rupees. Narration being investments realized. Sixth, goodwill of rupees 75,000 and prepaid fire insurance of rupees 10,000. These are two assets. The value is just given. It doesn't say they have realized anything. And where the question is silent about realization of asset, we assume that it does not realize any value and we will not pass any entry. So no journal entry for this transaction. Seventh point, there was an old furniture in the firm which had been written off completely in the books. This was sold for rupees 10,000. Sale of unrecorded asset, bank account debit to realization account. 10,000 rupees. Narration being sale of unrecorded asset. Question 8. Z, an old customer whose account for rupees 20,000 was written off as bad in the previous year, paid 60%. So again, realization from bad debts recovered. Bank account debit to realization account. 20,000, the amount of the debt, multiplied by 60% is recovered. Comes up to rupees 12,000. Narration being bad debts recovered. Ninth question. P undertook to pay Mrs. P's loan of rupees 50,000. Liability taken over by partner, journal entry, realization account debit to P capital account. Amount 50,000 rupees. Narration being Mrs. P's loan taken over by partner P. The last question. Trade creditors rupees 1,60,000. Half of the trade creditors accepted plant and machinery at an agreed valuation of rupees 54,000 and cash in full settlement of their claims after allowing a discount of rupees 16,000. The remaining trade creditors were paid 90% in final settlement. So half, 80,000 rupees, 50% of 1,60,000 accepted plant and machinery at an agreed valuation of 54,000 rupees. So the balance left to be paid is 26,000 rupees. Further, they are allowing a discount of 16,000 rupees. So we need to pay for the first half of the creditors. Amount to be paid is only 10,000 rupees. Plus the remaining 80,000 rupees of creditors were paid 90%. So 90% of 80,000 is 72,000 rupees. So total amount paid 82,000 rupees. Realization account debit. To bank account. The first half of 1,60,000 is paid 10,000, and the second half of 80,000 is paid 90% in final settlement, which is 72,000 rupees. So total amount paid by the firm is 82,000 rupees. Narration. Being creditors paid. The entries are done. I'll remove the split. We can view all the journal entries together. So these are the journal entries to the 7th example sum.